Welcome to the Explainer. So, if you're looking at the North Dakota housing market, you already know it's a bit like a giant puzzle. It's exciting, sure, but man, it can absolutely feel like a maze. You've got fluctuating rates, hidden fees, wildly different local economies. It's literally so easy to take a wrong turn. But that's exactly why we're here today. We're going to map out the optimal route and look at the absolute must-have tool you need to find your way through without losing your shirt. Okay, so let's start with the big one. The most important question you've got to ask yourself on this journey: is your dream home actually in your budget? It sounds simple, right? But honestly, this one question brings up so much anxiety for buyers. It's super common to fall in love with a property first and, try to figure out the math later, but that is exactly how people get completely lost in the maze. To really understand the stakes here, let's look at a real hard number: $278,400. That is the average home price in Cass County right now. Now, a number like that can feel kind of abstract, but your ability to actually afford that home, well, it depends entirely on how well you understand the financial mechanics running behind the scenes. And here's where the maze gets seriously tricky. You might assume a $278,000 home costs the same no matter where it sits in the state. No way. Just look at property taxes. Over in Sioux County, the rate is incredibly low. We're talking around 0.18%. But jump over to Cass County, and bam, it spikes to about 1.15%. These variables fluctuate wildly based on your exact zip code. If you aren't calculating these local factors before you buy, you're setting yourself up for a massive shock when that first monthly bill arrives. Section 1. Meet your digital guide, the North Dakota Mortgage Calculator. It is officially time to ditch the old ways of budgeting. Seriously, doing manual math with paper and pen, it's slow, it's tedious, and it is so prone to human error. Trying to test out different scenarios is practically impossible. But a digital calculator, it's an absolute game changer. You get instant, highly precise results. You can literally change one tiny variable, like the interest rate, and instantly see the ripple effect across a massive 30-year timeline. So how does this thing work? It is beautifully simple. First, you just plug in the total home value. Second, drop in your down payment, which, boom, instantly lowers your loan amount. Third, you add your expected interest rate and pick a loan term, usually 15 or 30 years. And finally, step 4, you interpret those results. The tool crunches all the hyperlocal data and hands you a realistic picture of your monthly obligations. It literally takes less than a minute, but the clarity you get, totally invaluable. Section 2, uncovering the hidden costs. This brings us to a really crucial point, perfectly summed up by financial experts. A home is way more than just a mortgage payment. It's a collection of ongoing maintenance and protection costs that you absolutely have to anticipate before you sign anything. If you're only looking at the loan amount, well, you're basically walking into this blindfolded. You're missing the crucial pieces that actually keep your finances safe. Let me put that into perspective. Say you use a simple estimate and think, awesome, my principal and interest is $1,200 a month. I can totally swing that. But hold on, let's look at the comprehensive estimate. Add in $250 for variable property taxes, another $100 for homeowners insurance, maybe $150 for HOA fees. Suddenly, your real monthly commitment is $1,700. That's a $500 difference every single month. This right here is exactly why a calculator that factors in localized costs isn't just nice to have, it's an absolute necessity to protect your wallet. And speaking of hidden costs, let's clear up a piece of jargon that trips up, well, pretty much everyone: APR, or annual percentage rate. The interest rate is just the yearly cost to borrow the money, but the APR, that's the whole shebang. It reveals the true cost of your loan because it bundles the base interest rate with mortgage insurance, closing costs, and other fees. Because of that, the APR is almost always higher than your base rate. When you're running numbers in your calculator, always look at the APR so you don't get tricked by a low initial rate that's just hiding massive upfront fees. Section 3, finding your perfect loan. Let's bust a major myth right now while we're at it. You absolutely do not always need a 20% down payment to buy a house in North Dakota. Actually, scratch that. You rarely do if you know your options. Government-backed FHA loans only require 3.5% down, which is perfect if you haven't built up a huge savings pile yet. Conventional loans can go as low as 3% for first-time buyers with strong credit, and VA loans, 0% down for eligible veterans. Because your down payment heavily dictates your monthly bill, testing these specific percentages in your calculator is vital to finding the perfect fit. Next up, you've got to decide how long this journey is going to be. A 30-year term gives you a lower monthly payment because, well, it's stretched out over 3 decades. It gives you some nice day-to-day flexibility. But a 15-year term, your monthly payment will definitely be higher, but you end up paying drastically less interest over time. tweaking just this one single setting in your digital calculator shows you exactly how the length of your loan alters your long-term wealth. But look, before you finalize any of those numbers, you really need to look at your credit score. It's basically the gatekeeper here. If you're sitting in the 760 to 850 range, you unlock the absolute lowest available rates, but drop below 640 and you're getting hit with higher ones. And a higher rate doesn't just mean a slightly higher monthly payment, it means tens of thousands of dollars more paid over the life of the loan. This is exactly why improving your credit score before you run your final calculator numbers is quite literally the smartest move you can make. Section 4. Taking control of your future. When you go in prepared, you can actually take advantage of some pretty amazing local resources. North Dakota has fantastic support systems, like the North Dakota Housing Finance Agency for first-time buyers. There are even special bank incentives out there, like a $250 credit offered near Gate City Bank. When you take this analytical approach and you bring your rock-solid calculated numbers to local advisors, you completely shift from being a confused buyer to an empowered homeowner. You know exactly what you can afford, and for sure, you know exactly what questions to ask. So we end exactly where we began, but this time you aren't lost. It is time to stop guessing about what you can afford, and definitely stop hoping the math just magically works out. The digital map is right in front of you, so the only question left is, are you ready to calculate your way home?